Asian shares slipped Wednesday on expectations that a trade dispute between China and the United States would simmer and possibly weigh on growth. Japan's benchmark Nikkei 225 gave up 1.1% to 21,020.72. The Kospi in South Korea tumbled 1.3% to 2,021.84, and Hong Kong's Hang Seng was 0.5% lower at 27,267.94. The Shanghai Composite fell 0.3% to 2,900.71, while Australia's S&P ASX 200 eased 0.8% to 6,433.30. Stocks tumbled as China reportedly warned that it would limit exports of rare metals using cameras, computers, smartphones, and televisions in the latest eruption in its trade war with the United States. Besides, investor sentiment took a knock, also as Chinese technology giant Huawei stepped up its legal battle to overturn U.S. legislation barring American federal agencies from buying its products, as Beijing toughened its trade war stance. European shares also slid on Wednesday after a warning by Chinese newspapers that Beijing could squeeze its supply of rare earth metals to hit the U.S., sending jitters throughout the markets and prompting investors to flee for safer ground. If so, the move would escalate tensions between the world's two largest economies. Rare earth elements uses include rechargeable batteries for electric and hybrid cars, computers, wind turbines, and lighting. Italian equities shed 1.3% on the day. The country's banks have been under pressure this week, during which time yields on the Italian sovereign's debt have broadly risen against the backdrop of a possible €3 billion fine on Italy by the European Commission for breaking EU rules. U.S. stocks fell as well, with the S&P 500 and Nasdaq closing just above key support levels, as worries that a lengthy U.S.-China trade war would crimp global growth pushed investors into the safety of government bonds. Each of the major U.S. indices suffered their fourth decline in 5 sessions. The S&P is down 5.5% from its April 30th closing high. However, both the S&P 500 and Nasdaq managed to close just above their 200-day moving averages, seen as a key level of support. Each of the 11 major S&P sectors were in negative territory, with the utilities being the worst performer. The Dow Jones Industrial Average fell 221.36 points, or 0.87%, to 25,126.41. The S&P 500 lost 19.37 points, or 0.69%, to 2,783.02. And the Nasdaq Composite dropped 60.04 points, or 0.79%, to 7,547.31. As for individual stocks, Johnson & Johnson dropped 4.19% after a lawsuit that accused the drug maker of fueling the U.S. opioid epidemic entered its second day of trial, pulling healthcare stocks down 1.20%. In the currency market, the dollar has caught a bid and appreciated against the majors, including the Japanese yen, as U.S. stocks rebounded above the 200-day moving average after a dip below. The euro-US dollar slipped to a low of 1.1124 and closed around the daily lows as the dollar turned stronger across the board, while German unemployment unexpectedly rose for the first time in almost 2 years. The unemployment increased by 60,000 in May, and the jobless rate ticked up to 5%. Meanwhile, the European Commission sent a letter to Italy on violation of debt reduction rules. As a reminder, the EC is said to possibly consider a fine on Italy worth around 3.5 billion euros. Additionally, ECB's Ren said that its first rise in interest rates is now further away than it was a few months ago. And as for commodities, Brent crude briefly dipped to a low of $66.64, but managed to trim losses afterwards and settled around the $68 figure. The market plunged mainly on U.S.-China trade war escalation as investors focused on the demand side of the oil market. The prospect of a protracted trade war between the world's two largest economies has had investors and traders worried that economic global growth would slow down and dragging down global oil demand growth along with it. Towards the end of the day, the prices trimmed losses due to the API reports. The American Petroleum Institute reported late Wednesday that U.S. crude supplies fell by 5.3 million barrels for the week ending on May 24th. The report also showed that the stockpile increase of 2.7 million barrels in gasoline, while distillate supplies fell by 2.1 million barrels. Inventory data from the Energy Information Administration will be released on Thursday. The EIA data are expected to show crude inventories declining by 1.4 million barrels last week. And that is all for today. Thank you so much for watching. Please click subscribe to always be in touch with the latest market news.